Okay. Um, a bit of news out this afternoon, this evening, predominantly out of Europe, which you kind of get the feeling that they've hit a bottom and have stabilised, despite what's going on in Greece. Germany have told the Greeks to put up and shut up. So you might see that the Greeks step out of the eurozone and default on their debt. That's a possibility. But other than that, Europe seems to have bottomed. These manufacturing PMIs are not as important as they used to be, um, but they're still obviously worth watching and being aware that they're coming out because they're obviously if there's a huge change in them, that'll have a big effect. But, just got last minute email come in. Okay, so yeah, that's something to keep an eye on for this evening. Okay, what what I noticed that's going on is we've got the six majors, um, and we can see that not a hell of a lot of action for the last month. Um, we've got the Aussie just in a tight 100 pip range between sort of the low 77s to the low 78s. You got Europe and during the same, pretty much the same time period, in a 200 pip range, going nowhere. The yen's in a 400 pip range, not really going anywhere either, although it is 400 pips. You've got the CAD going nowhere. However, we do have two currency pairs that are trending and have been trending, and so that should give us opportunities in those pairs. The last one that's also, there's another major here called the Swiss, has also been weakening drastically since they moved the floor. And that in itself should give you opportunities when you see divergence. So you've got the pound getting stronger here, you've got the Kiwi getting stronger here. There may be opportunities in these ones that are trending, such as the Swiss, the pound, and the Kiwi, against the pairs that are not trending, but more so that when they're going opposite. So you've got the Swiss getting weak, and the pound getting strong. You'll see things like the pound Swiss here, obviously having a great trend. The Kiwi Swiss, obviously having a great trend. The Kiwi yen, or the pound yen, you've got the pound going getting stronger, and you've got the CAD going sideways. It's trending, but not as strongly as something like the pound Swiss. Does that make sense? So it's good to keep an eye on the majors like this to see what's where there may be an opportunity to grab a trend when things are going sideways like the Aussie is at the moment. You don't trade that unless you're trading a range. You just stay out of it until it is trending. Same with the euro dollar. You all hear me? You're all pretty quiet. Yeah. So just be aware of what the market's doing if you're not, and that's why the first. Cheers, thanks, Dave. That's why the first thing you look for should be higher highs, higher lows. Are we making a trend? Cool, thanks, guys. It's good to know that if you talk up, I know that you're actually listening. It's just the same in class. I'll be in class all next week as well, so there's no webinars next week. There will be webinars for the boot camp, but not recorded. The QnA webinars, however, next week are not on. Yeah, so the first thing on our checklist is to, if you're trading a trend, is to, are we actually trending? And the Aussie's not, the Euro's not, the yen is not really, neither is the CAD. But these two are, and so that they're our biggest things that we should be looking at. So I'll go to your emails. Just late was this one, the monthly. 76 I see as a level purely because of this on the shorter time frame. You'll see it. Certainly, there seems to be large support down here at 71. Yeah, so that's okay. Major support in the way I presume you're looking at getting short this trend. Yeah, we can see the trend. We can see the cyclicity. We're certainly getting lower lows. Some hidden divergence here, as pointed out by these red arrows. Lower highs, lower lows. No price without price action. 7 out of 10. Okay. Waiting for one more seller bar. Yes, I'd have to agree with that, Jess. The current bar is just an inside. Okay, it's borderline bearish. But it's just an inside bar. The US dollar was getting pretty weak thanks to the FOMC minutes, and it needed a natural pullback anyway. But the FOMC minutes also came out this week and said that they were discussing keeping rates low for a long period of time. So you want to see that bulls come back into the US dollar before jumping onto it again. The RBNZ is meeting, I think, still another 2 weeks away. It's around the 12th of March, I think it was. So this is just an inside bear bar. We've had buying, doji, buying, one seller. So for the last week or so, it's been more buyers than sellers. So you've only had 1 day of selling, and that's probably got caught up with the S&P coming out saying Australia's stuffed, which we can see that certainly turned things around. It was looking pretty good for a bit there, and the S&P came out yesterday and stuffed the whole situation. And I dare say the Kiwis got caught up in that. If we look at the time on this, is 0600. Yeah, so 0600. Come on, show me. It's 1000. Yeah, 0600. They also turned around. So it's just an inside seller bar at this stage. So I agree with you that we need to see more there. But you got 7 out of 10. 76.13 is you've got that there. That's fair enough. I've got 76. Nice round number. We kind of got, I think, close to it in terms of 18, 17 pips away. Certainly the 50 EMA is there as well. I don't see a fib reacting to it. There's this getting close to the 786. You've come from up there and showing the 61.8. 61.8 is in here. Certainly you could look at it there. If we go from this bar here, I know that's an inside bear bar, but this is a kind of inside doji bar. It doesn't really give you, but you can see that the selling sort of started there and accelerated. So that's where I'd have my fib, and we can see the 61 is offering resistance there. Sorry, it was the Kiwi yen that I was, the fib here on the Kiwi yen that someone wants to look at. That's the 78. So 61.8, you're quite correct. And 7 out of 10 is good. Just we need to wait to see that bearish. The risk reward, yeah, you've got this 71.23 level. Depending on where this closes, obviously, in terms of risk reward, let's say it closes around here at 74.70. 100 pips, 120 pips stop. Even to this previous low is 290. It's something you need to be aware of and see how the bar finishes. So this is obviously a trade for Monday. Momentum's in the right area, and yes, there's hidden divergence here, which you've noted. Just going to that level that you've got at 71. And my history doesn't show that level like yours did. And yeah, it's you've got this high here and you've got that low there, but that's two, and then you've got a sort of a little bit of respect there. But I'd call this as a sort of soft to medium, around a medium level. It's not a strong level, certainly not like this double top up here. Um, and I'll just bring up yours. I'd call it a medium to soft rather than a strong level. Yeah. To, yeah. I mean, you might even go a bit higher there because of that. Yeah, looking at that, it does increase its strength, but it would have been strong here, strong, and then as it got disrespected, it sort of has gotten weaker. It didn't really sort of get to it at this point, but certainly something to be mindful of, and you'd be monitoring it when price gets down there. But in terms of risk reward, I think even to this low, you're within 1.5. So yeah, I'd be looking at it. And if RBNZ do cut rates, they get which is pretty highly likely, um, then that level will just get monstered, and you won't have to worry about it at all. Okay, so it's certainly something to look at for Monday, depending on what this bar is, obviously. Cool. Then we're looking at a gentleman who has taken these two trades in terms of pound CAD. He took on the daily. Pound CAD. Pound CAD. Took on the daily. Higher highs and higher lows. Yes. Direction long, swing long, RSI 61.8. Yeah, okay. $1.90. I don't know if that sort of appears in history as a level. Could well do. $1.90. Yeah, I would have thought sort of this level here, 92, would be a little bit stronger. Again, my history doesn't really show much in terms of $1.90. Is that a level? Get in there. It's a pretty soft level, really. $1.90. However, what else you got in here? Bullish. Yeah, I think 92 is probably a bigger level, as I pointed out on the market. Oil is fart arsing about, really, but it has got a ceiling. Yeah, it's still sort of hanging around in that 50-53 level. People are still expecting it to go lower, but its price is refusing to follow that. So the CAD, if it does break down, the CAD will get weaker. If it hangs on, then the CAD will get stronger. Notice the bond market here is getting weak, which would suggest that this is the US bonds, which would suggest the US dollar is weaker. So that's something to keep an eye on. And if US dollar is weaker, then crude should naturally be stronger. There's all a bit of uncertainty at the moment around the CAD. However, the pound is quite strong. EMA support, no. You're above them, yes. RSI convergence, yeah. Resistance, retracement, trend line, continuation, divergence, yeah, bullish chart pattern. Yes. Well, what is that? If you're going to say yes to that, I need to know what that is. Economic, oil has hit its range high and is retracing, giving a weaker CAD. Alright, yeah, I kind of agree with you. It'd be interesting to know how much risk you're putting on this, because you are quite overextended. You haven't had the full pullback and you're only coming off a soft level, so I would be putting I wouldn't be putting as much risk on the trade. Obviously, it was looking like a hero for a bit, thanks to a stronger pound and perhaps a weakening oil, and you're in the trade, well and good. But yeah, how to manage that now? Well, you have a reason to move your stop. You might reduce half your risk by getting it under these lows here. That's a potential option. Okay, then you're showing me the pound yen 4 hour. You got in on. There's an option in there which I missed. People were wanting to know what to do in front of the BOJ, and the British news suggested take half your profit and or some of your profit off the table. There's another little ring low in here. Is that an option? Well, I don't see a very strong level there. This resistance level at 84.15 looks stronger. Yeah, you might call it just 84. And so I think coming in here is there's certainly an opportunity. I think you went in on this bar here. You said you got in at what? After the 5 p.m. bar, which I think is that one there. Anyway, let's have a look. This might tell us. Yeah, you went in there. As I said, this is a pretty weak horizontal to do so. So again, your percentage of capital you're allocating is should be a lot less. But certainly you're getting higher highs and higher lows. This high is 2 pips higher than this. It's only just, but at these higher highs, as I noted there, 84 is a bit of resistance, so something to be careful of. Yes, you're above these again. You're not it hasn't had the full retracement like it did back here off the 50 when you're coming in here. So again, it's weaker. This trend line might be the most attractive thing on this. Yeah. If you're saying it's a trend line support, I would be having you fib from down there. Right? So you've noted this is cycling along the trend line. Okay, well and good. When you enter the trade, that's great. You should then say, well, this is my fib here, and I'll go from there to there, because that's the cycle. And so now you've only got it coming off the 382. Yep. If it's cycling along the trend line. Again, I think it's a weaker setup, and therefore should have less capital. It could well go and continue the trade. I mean, your reasoning behind it is a strong pound. Yeah, it is a strong pound, and it should remain strong. And the yen is weak and probably remain weak to sideways either way. This could well and truly go and continue. If you look at the daily, I mean, when you got in, the RSI was around 50, 53, which is great. Back here, it's a lot lower, so that's even better. But if you look at the daily, there's still room to go on this, and you'd expect if it breaks this 84, you'd expect it to sort of be hitting up here around 87. So there is an opportunity there that it possibly exists. I just think the setup was weaker, and those who got in here, they would have moved their stop underneath this prior to the news. News has come out, and now I would be, if I was them, I'd be having my stop underneath this. So they're well in the money. Coming in here is a little late, but certainly there is an opportunity, just a weaker one, if that makes sense. Yeah. All right. Kiwi dollar short, another one looking at this. Trend continuation, strong resistance not broken, RSI divergence on the 4 hour. Not worried about it. If you're trading the daily time frame, you're not worried about what the 4 hour is doing at all. Bearish on the 4 hour. Early entry off the 4 hour. No, if you're trading the daily time frame, analyze that time frame and look at it on that time frame and stick to that time frame, and worry what the shorter time frame is doing. You might look up time frames, but don't look down time frames. You know, if you're looking at the 4 hour, when did you send this to me? Middle of the night, right? Okay, yeah, the 4 hours doing a phase 2, but I don't advocate trading the shorter time phase 2. Okay, there certainly is divergence there over the last bit, but I don't advocate trading that phase 2 on the shorter time frame. Okay, and I'm not worried about what the 4 hours doing if I'm studying it on the daily time frame. Daily, yeah, we've sort of looked at it in the first cab off the rank this morning, and that fits it. We just need to see that more continuation of the selling, the confirmation of the selling, sorry, before getting in it. But just don't get caught up in what the 4 hours doing when you're looking at the daily time frame, and don't be trading the 4 hour as a front running of the daily. Don't be trading the 4 hour phase 2. Phase 2 trading is a tricky as itself. You know, people were looking at the pound Aussie, trading the phase 2 earlier in the week on the daily, and that even was looking good for 2 days and then reversed. Yeah. Yeah. This is the pound Aussie phase 2. Phase 2 trading is very tricky, and it doesn't always work. So you get better results going with the trend, with the momentum in the phase 1. So by all means, do not trade the phase 2 on the shorter time frame. If you want to trade the shorter time frame, fine. Wait for it to cycle underneath the moving average and then go with it. But I'll be looking at this in the daily time frame, ignoring what the 4 hours doing, and then waiting for that bar to give us the signal. Okay. Kiwi yen short. I think you went in a little too early. You're not going in. This is just an inside seller, maybe bearish bar. You're not going in underneath that. You're waiting for this bar to be complete and go in underneath that. Yeah. So you've gone in too early. You should be coming in underneath this one here at a price. What's the low? Is 89.20, so around 89.15 or something like that is where you should be looking at getting in. In there somewhere is your entry. You've gone in a little too early. You'll be placing that order for a potential trade today, absolutely. You know, you've got some resistance here off these highs. You know, previous high, lows. Certainly got resistance there around, let's call it 90 cents. 90 yen, sorry. Yeah, we can see that. And it's one seller bar doesn't make a trend. We get the confirmation bar, and then we want to go with it if the selling continues to enter the market. And looking at the Kiwi dollar, we kind of expect that. You know, the Kiwi's up against some resistance, so we do kind of expect it, but we don't presume it's going to be there just after one bar. So wait for this bar to finish and then look at it. Okay. So now that it's finished, you can be looking at it, placing it in here or getting into it, because I can see that it's already a position. It says sell. Yeah. I know you sent me notes on this. Alright, so undersized reversal seller bar. Okay. RSI indicator overbought. Yes, it certainly was. That's an ideal spot to get short when it comes up to this area. Horizontal resistance. Fib retracement to the 786. Yeah, it's in the seller zone. Absolutely. Support is at 85, 82. Is it? 85, 82. Why do you say that? 85, 82. Yeah, okay, fair enough. And so that's why you've got your target there. But in terms of risk reward, you're coming in above that, and so you're looking at a risk of 1 for a reward of 3.1, which is fabulous. Okay, so it's all good, like your analysis, just getting in a little too early for my liking. You know, an undersized seller bar doesn't mean diddly squat to me. You know, you can see them everywhere. What does it mean in the scheme of things? Not much. You want to see more continued selling, and which we have in this bar. So then you're getting short underneath that. So there is, yeah, absolutely, Dave. There is a potential trade there for today. And if you want to do risk reward down to here, that's fine. That's still 3 to 1. That's good. Yep. You then give me dollar yen. These all came in late last night. Look, at the start, as I said, there's no real trend in this. You've got horizontal levels everywhere. When you start drawing horizontal levels everywhere, then you're not really in a trend. You're just range bound. Okay. Yes, it's broken out of this descending triangle, so to speak. But it's, you know, look at it. It's just going nowhere, and it really still has failed to go anywhere. Yeah, it's broken out of that. And you could have a inner one as well, and across there, which looks good. Or that one there, yeah, it's broken out of that. Certainly has broken out of these triangles. Trend lines, yeah, big whoop. We do have, you now have a cycle above the moving average, granted. However, I would have been looking to go long above this bar here at 1945. Okay, that's 119.45. We then didn't get that, and you now got a inside seller bar. You've then got a low test bar. So if this bar here finishes as a higher low, I'd want it to sort of be above these two bars here, and we'd have a ring low formation. You could then potentially look to get, you know, you'd have your stop here, or maybe even not really down there, but a stop there around $1.18, and your entry would be looking in around here for Monday, depending on where this bar finishes. Yeah, because we do have a cycle of higher highs, higher lows. Yeah. But looking at what you're getting into here, and let's have a look at your notes. Golfing bullish bar. Okay, so you were looking at it at that time. 18th of the 2nd, 2 days ago. Okay, fair enough. My bad. You were looking at it at the right time. You've got the fib coming back to the 61. Good. You've got this, your target at this 1.618, which also happens to be that high there. Good. Trendline support, buyer zone. Yep. 1 to 1.8. Fabulous. Again, all good. Sorry, I thought you were looking at it for a trade today, being that you sent it to me last night. Trendline, really? Okay, from way down here. Fair enough. Yep. Second trend line, good. So there's all the reasons to sort of be looking at it. Then on the 18th you didn't get in, so you cancelled trade. You've now got a low test bar. Again, that's not really strong enough because now it's just sort of range bound. not really strong enough just yet to be looking at it. Perhaps a trade for Monday, perhaps. This bar will need to have a look on tomorrow morning and see, and then be placing the trade Monday morning on the open. But at this stage, you're not placing it, and you don't have your order here because you don't know what's going to happen today. It could be an engulfing, it could be looking like this, engulfing seller bar. So just be patient and wait for Monday. It's Friday, man. Take the day off. Yeah. Okay. That's that one. And last email, Duncan. Sent an email. I've now tested chart showing where I entered and where my targets were on dollar CAD. Okay. Dollar CAD. Buy. 13 stop loss there. Okay. Entered on the 20th of January. Hit both targets. The 20th of January. Entered in here. Okay. Cool. Right. You also go on to mention the dollar Sing. Yes, bit of a wedge getting in there, and it's been good to you. All these trades, yeah, well done. And you go on to note that capital index don't have the dollar Sing. Well, this is. I've only got a demo account with capital index yet. They're still not provided the live ones out yet. Hopefully, I will have them next week. But if you go, I've done show all. You can see that dollar Sing is in there. A lot of companies are now. I noticed FXCM, an article on FXCM this week where they have removed pairs that have pegs on the dollar, and the Sing is one. It's pegged to the US, and the Hong Kong dollar is one, the Chinese yuan is one, and the Swiss was one. And so FXCM said, well, we don't want it. They lost $200 million. $200 million. Thanks to the Swiss National Bank's removal of that peg. And so they didn't want to get caught again, and they just said, we're not offering trading on anything that's got a pair on it. Now, Capital Index could potentially, but they obviously haven't done that. I mean, they're showing the Swiss there, they're showing the Sing there, and they're showing the Hong Kong dollar there. They don't have Russia or China, but yeah. When you get your demo account, and I know you're still trading with Axiom, will be until the end of March, but with your demo account, they do have that there. Okay. So if you like the Sing, mate, it's still there for you, and this is certainly still trading. Okay. And your last one here, dollar CAD. As you're looking at it again, your stop loss under there, your entry is there by 13, you take profit, 2 take profits. Yeah, look, if oil does fall, then you might have that, be having that option. Does seem to have formed a bit of a base here, but I think it's a little more range bound, but certainly that's starting to look reasonable. If it makes a higher high, then yeah, you could look at that. In terms of the CAD weakening, is that a reasonable horizontal though? No. I think it's a soft horizontal. Certainly there's resistance there, and you might look at that one as well, being that low. Something over there. Yeah. Don't know. Yeah. It's to me, it's a weak entry when you're this far out. It's a long way from the moving average. Yes, this trend line, but yeah, that to me is not much. And I wouldn't consider this a cycle. That's just a low test bar within an uptrend. And so it's back to the 382 only, really. And therefore I'd be putting less capital on it. There may be an opportunity there, but I wouldn't be betting the house on it. Okay. Yeah. Okay, guys. So that's me for today. For the week, and potentially, well, certainly for the month in Q&As. Okay. So thanks for listening. Thanks for participating. Yeah, one opportunity we saw there, that's something to look at. If we get we can be placing an order today, some selling coming in. You guys have a lovely weekend, and I will see you on Wednesday. I'm doing the prop boot camp, and on Thursday the platinum boot camp down in Sydney. Perhaps I'll see you guys online then, or actually in the course. What are my thoughts on Aussie Kiwi hitting 103? I dare say there will be a lot of Kiwis heading home if that's the case, taking their little Kiwi dollars and their little Aussie dollars and spending up a storm over in New Zealand. Sorry, the other way around. They'll be heading home to earn Kiwi dollars to come back here. What do I think of the Aussie Kiwi? I think it's proved a perennial bloody disappointment for me. Class C divergence here. 21, 23. Not even Class C, that's Class A. 23. Oh no, 21. 21 and 21. So you've got Class C divergence there. You want to see this bar buying. I'm not going to take it on just because of a low test bar, not against this. We know that every time it gets down this area, the market reverses. Generally, it reverses more dramatically than what it has been trying to do. Certainly is a zone of support down here at 103 to 106. The only thing that's going to make this get back up to $1.20 is if the Kiwi start cutting rates, and that's a good chance of happening. But at this point in time, this might be something for Monday if this bar hangs on and makes a higher high. But at this stage, no. The other thing you've got to look at is obviously, do we have an extension? And I doubt that. The 1.272 would be miles away. Yeah. So there's no, whilst it's a very strong horizontal, I wouldn't suggest that. I think it'd be a pretty tricky trade to take on. Fundamentally, I think it's, there's no reason why it should be here. There's no reason why it should be there either, except for the higher interest rates. Yeah. Maybe something to look at because of that horizontal and because you have the divergence. But it's a matter of wait and see until you see some serious buying interest come in. Yep. Okie dokie. And as I said at the start, just keep an eye on the majors, see what they're doing. You've got 2 that are trending and 4 that are doing nothing. excuse my, that's really poor grammar. Doing nothing. Drop my G's. My mother would be horrified. Right. See you next week. Have a safe flight over. Cheers, Carol. But I'm actually in Australia right now, so yeah, I shall talk to you guys on Wednesday. Have a good one.